We are looking today to blow up the DAX, and I'm going to create a custom workspace using standard Flux Professional tools, and then we'll also use the Flux Daily Cycle Marker tool. Someone had asked about analyzing the DAX market, and there's actually a number of techniques that we can do to be proactive in forecasting that market. So Earl, what time frame would you say? I'm here today with a plethora of Flux customers. Earl, what time frame would you say you focus on the DAX when you're looking at the bar size? $10-minute bars, 5-minute bars, 3-minute bars, 5-minute bars. Okay, perfect. So the goal obviously then is to find a means of predicting when these moves are coming that's most accurate. And I'm going to walk you through several different techniques today. And you can do this with any instrument, futures, forex, equities. You can do it with Harley-Davidson, you can do it with hog futures, you could do it with the euro-US dollar. It's all the same stuff. So the first thing we're going to do is we're going to remove these annoying session break lines that seem to be standard with Ninja Traders stuff. The second thing we're going to do is we're going to apply a Flux time cycle marker. Time cycle markers will almost always be your go-to indicator when you start looking for the best settings for something. And so we're just going to expand out the settings on the indicators here. And Earl, I would recommend, just based on my experience of late, looking at an analysis type of the ones that are available. We currently have CCI, stochastic, double stochastic, MACD, trend. Start out with a stochastic. I want to just put extra zeros in there to make sure. So I have 3 zeros after the 1. According to Ron, you only need 3. And it covers all the possible signals when we filter time through the stochastic. I make sure, Earl, that I have 2 weeks in my max weeks look back. So it's going to look back 2 prior weeks of each weekday. So 2 Tuesdays, 2 Thursdays, 2 Wednesdays. And my stochastic period I have set to 5 and 7. Just sort of out the gate. I leave the base instrument blank because it's going to autofocus to the time in my chart. So this will automatically reference a 5-minute time cycle, even though the base time frame is filled into 1. It's a weird programming quirk, but there it is. So I have that. I have my marker labels. Basically, it'll print the time above and below each one of the signals. And each one of my signals has a green dot or a red dot, depending on whether or not it was a buy or a sell time. And so the first thing I want to do, Earl, is hit OK, because it's going to fill in some blanks for me. And then I'm also going to put in a moving average. And I just like to do that to frame price actions so I know what I'm dealing with. And then I stretch it out. Okay, so Earl, this gets me in the ballpark. So this chart gets me in the ballpark, and I'm going to come in and add a histogram underneath it with the same settings. Stochastic 5-7, yada yada yada. And that's sort of the plain Jane traditional analysis, and it gives us the times in the future to wait for, the times in the future where things are expected, and it helps me see what's going on right over here. Okay, So when I look at this chart, Earl, the first thing I'm looking for is how accurate were the forecasts. And at this point in the cycle, I'm not trying to blow smoke up my own butt. Like, I want it to work really good, or as good as it possibly can. And so I'm looking primarily at the location of the dots in relation to what actually happened at those times, right? And your brain is really good at that. So when the trend was down, were these red dots at the peaks of pullbacks? And we can say for the most part that they were, up to and including this morning. So Earl, each one of these red dots appears within 1 bar of the apex of that move. And it's important to reference that word apex because I catch a lot of gruff online from people who say anyone can pick a trend entry and be right most of the time, when the fact is that's not true. So what I'm looking for specifically to validate the time, I'm looking for moves like this, Earl, where you see how that triangle catches that signal in the middle of that triangle. I want to see that the banks pulled up and then dropped. Okay. Same thing for the bottom. I want to see that green dot at the bottom of the move. And as we go back and look at the different days, I want to make sure that I'm not in love with this Earl because it was 1 day of signals. So here's yesterday's signals using a 5/7 stochastic look back, 2 weeks worth of data. So I'm in the neighborhood, it would seem, using a 5-minute chart on the DAX. Most of the red dots are at an apex high, most of the green dots are at an apex low, and Earl, I'm close. All right? And there's a lot to be said for close. But I have a few other techniques up my sleeve that I want to throw at you and see what you think. So let's go ahead and save this workspace. We'll save it as FDAX Time Cycle Exploration. So I'm going to open a new chart. Actually, we'll save this as a template. File, new chart, FDAX 0917, 5 minute, 15 days of historical data. There's our template. Boom. Okay, so Earl, this is a mirror image of the one we just created, right? Now, here's where things get fun, or for me they get fun. I'm going to take this histogram off. And now, I want to explore other markets. So, instead of looking at a DAX base instrument to funnel the time cycles through, let's look at gold. Okay. Now, here's the wonderful part. The wonderful thing about Tiggers are wonderful things. When I change it from histogram times related to the native organic instrument of the DAX itself, it's pretty good. When I change it to gold, things got better. Or the clarity of the chart improved. The punctuation of the moves, at least for today, the accuracy increased. Now if I scooted over 1 day to yesterday, Earl, I'm looking for that same functionality, that same red bar within, red dot rather, within 1 candle of the high, that same green dot within 1 candle of the low. And so I'm definitely seeing that there's a stronger relationship, or a very strong relationship, between gold futures times and the DAX. Matter of fact, let's add a little more data to this. 30 days worth of data. We can go back and see just randomly that gold futures has a tremendous impact on the times that the DAX moves. Okay, but again, we're missing the histogram for that. So one of the upgrade indicators we offered a couple months ago is the Flux multi-instrument analysis histogram. And I'm going to put that on here with the GC. Double stochastic 5.7. Whoop. I got to put that instrument in there as well. There we go. So Earl, this puts the GC histogram on top of the DAX. Now, I've got two different ways of looking at moves in the future. Okay, we'll pull this out. We'll pull this one out. Both of them have merit, right? Let's create a third one. One more. And you know what I'm going to do with the third one already, I guess. I'm guessing you already know. And we're going to save this template. Again, we know what times are coming up next. Templates, save as, there we go, XXX. File, new, chart, FDAX. 5 minute, 15 days, XXX. So we're using the same template to start. And instead of looking at GC futures, we're going to look at oil futures. So I'm going to come into this indicator and tell the PC, look, I know I told you gold, I know I told you DAX, but let's take a look at what happens at the important crude futures times when it's time for those things to occur. And that's the oil over on the right side. So when I blow this chart up, blow it up, I'm asking myself the same questions that I asked earlier. When there's a red dot, what does it do? When there's a green dot, what does it do? And this one appears to have merit as well. Before we run out of data. My initial reaction is that this one is the more consistent of the three. That gold futures on the DAX is kicking ass and taking names. And that's been my experience in the past, that the DAX is really responsive to gold futures as opposed to its native organic times or crude futures. But the good news is we don't have to choose. Earl, one of the things I can do now when I decide which two charts are the best is I can A/B it. I can put the two things next to each other and I can make them fight to the death and see which one is helping me. And sometimes having the two things together can be a Justice League situation where they're actually on the same side fighting the same battle. Okay. The other thing we can do is we can use NinjaTrader's global Crosshair feature to just cross-analyze real quick and see which one is working better. They both caught the 725 signal. Earl, crude didn't catch the 755 push-up. Crude didn't catch the pause at 8:15. Crude didn't catch the push-up at 8:30. Only GC did. GC caught the push-up at 5:20 sooner. It caught the push down at 5:40 the same time. and 615 both came in at the same time, but gold caught the signal over here. Let me check for a second because something's not working right again. This histogram isn't matching up. There's a 5 o'clock signal here on the time cycle marker that's not showing up. GC 0817 5, stochastic 57. GC 0817 5, double stochastic, that's why. Stand by. Just want to get everything to match up. Same thing over here. It's close enough in appearance that it threw me off. Okay. So I've got it in the ballpark, right? Earl, I've got two things that are working hard for me so that I can be hardly working. And I don't know if it has the accuracy that you're looking for. And I don't want to presume that it's as accurate as you want it to be. While I'm in here, there are a couple things you can change. You can change the sensitivity of the stochastic filter that you're using. So for example, instead of a 517, what if it was a 1517? What would that do to the time cycle marker signals? And Earl, do you see how it pushes them out farther away from each other? So the bigger the filter value, the more signals you're going to get, because it's looking for bigger swings. Conversely, the smaller the filter value, if you go from a 5.7 to like a 3.5, you'll get even more swings. And so you generally want to stop when you've got most of the swings covered, but not so many that it's starting to crowd your screen up. So I sort of work it backwards. And right around a 5.7 Earl, I'm catching most of these highs and lows, if that makes any sense. Low, high, low, high, low, high, low, high, low, high. And I missed this low right here, but there was a bump here, so I don't get too angry about that. Okay, so gold on the DAX tends to work good. I'm going to just drop it down to a 1 minute chart, Earl, so you can see what I mean. If I change everything to a 1 minute chart, watch. You see where those signals are coming in, brother? That tells me I'm still in the neighborhood. And if you wanted to, you could leave these as 5 minute signals on a 1 minute chart, and then you really see it. The high and the low and the high and the low and the high and the low. Okay, so I'll go back and put this on a 5 minute chart. Yep. Okay, so we've got those two things together. So conversely, that's the other thing you can do, Earl, while we were here. You could change these on 5 minute bars to 10 minute signals. So now you've got 10 minute dots on top of your 5 minute bars, and that will decrease the number of signals that you've got right here. One of the things that I'm seeing, we'll come back and look at that in a second. So 5 minute indicators, Flux Histo 5. Okay, so we've got those two things together right there. Perfect. Everybody with me so far? Gold is sort of the champion right now of anything that we have available. We can keep CL over here as an advisory service, maybe. Take care, Johan. Okay. So now that we have this, no, John, I'm on my old PC. Thank you, though. Earl, I want to show you a second technique that's really, I think it's really powerful. I'm going to take the histograms off here, and I'm going to change this to a 60-minute chart. And for the data, I'm going to load 150 days. Wait, before I do that, I'm going to change this to a 60-minute histogram. And then I'm going to load 150 days. Okay, so Earl, I've got a 60-minute 5/7 stochastic on here. And now, Earl, I'm going to take the parameter for the time cycle marker and I'm going to change it so that the barrier lines, let's put 100 of them, are never ending. So you see my barrier lines there, muchacho? A lot of lines on that chart that look kind of ridiculous on a 60-minute chart. Looks like spaghetti. Okay, so one of the first things I do, and anybody can do this, a professional or an investor package owner, is I come down and I change the colors of the dots. Because for some strange reason, the colors of the lines are tied to the dots. So, Earl, I take those dots and I make them black. And then I get rid of the timestamp. Do not show. Do not show. There's our thing. Okay. So Gann, when he talks about these time cycles way back in the 20s, 30s, he says that if you find the time cycles, you will find why tops and bottoms are found at certain times and why resistance levels are so strong at certain times, and bottoms and tops will hold around them. So Earl, all I've done here is I've said, well, let's find 60-minute DAX turning times. And you see how, guys, the cycles are still appearing at the tops and bottoms. Top, top, bottom, top, top, bottom, top. So we're on the scent with the time cycles. But now I want to, Earl, take advantage of the other half of what Gann taught, which is this relationship between time and price. So the closing bar, the closing price of every time cycle marker bar has a line extending forward to the right. And one of the things you'll start to notice is those lines are acting as support and resistance. Does that make sense, muchacho? But I'm looking at 60-minute lines, Earl, because I want to see big bounces on the 5-minute chart. If I wanted little bounces, I would be looking at 5-minute lines. So let me show you what this looks like. I'm going to come into the base instrument, and I've got the base instrument set to CL0917 and the time frame set to 60. And Earl, what that allows me to do is it allows me to drop this down to a lower time frame. And when I drop it to a lower time frame, does it still feel spaghetti-ish, or does it feel like there's some information there that we need to be aware of? There's info. Things are stopping and consolidating and bouncing at certain points. Okay, so I'm going to go from a 15 to a 10 and watch how that gap starts to increase. It's not so spaghetti-ish, but the market is bouncing back and forth between these levels and consolidating in the areas where there are tons of lines. Alright, so rule number 1 in time resistance, when you have a bunch of lines in a compressed area, the market will tend to consolidate in that area. When you have a bunch of lines in an area, the market will tend to consolidate in that area. When the gaps between the lines, Earl, are large, that's where the candles move the farthest, the fastest, with the least amount of resistance. But you're not really interested in a 10-minute cycle. We started out and you were looking at a 5. Boom. Now things are getting kind of exciting. On a 5-minute chart, these lines are giving us important information. Okay? But there's still a lot of them. Would you guys agree there's a lot of 5-minute lines on here? Or a lot of 60-minute lines on the 5-minute chart? There's a few. So I want you to think of this method like a radio dial. Think of this method like a radio dial, Earl. Remember the old days when you wanted to tune the station? And so you'd Sunday, Monday, happy days. I want to hold your hand. Come on, baby. We're going to tune this radio until we're satisfied with the support and resistance network. We're going to sort of find a resonant SR network. And every market has one. So there's one number we can change. Juan, what number do you think we can change? John, what number do you think we can change to sort of tune in, dial in the support and resistance network for Earl's 5-minute chart? Oh, and there's one other thing I forgot to do. We were looking at CL, but Earl, we said that GC was the better instrument, right? I've been looking at the wrong instrument this whole gosh darn time. There's GC. The GC times, sorry. There's one setting right here, Earl. And that's the base time frame. If I change the base time frame, it changes the number of signals. The higher I go, the fewer the lines. So when I go from a 60 to a 91, did that get a little cleaner just now? Yeah. It's starting to get exciting in here, right? Well, let's go even higher. Let's go from a 90 to 120. Ooh, hey. Now that's a little sexier, isn't it? A 90 to a 120 did something very interesting just now with Earl's crazy 5-minute network. Now, lesson number 2. When you're on the crab, to quote Discovery Channel's Deadliest Catch, Mike Rowe, when you're on the crab, here are some things that you're going to start to see. You're going to see bottoms come in at these lines. Earl, you're going to see tops come in at these lines. You're going to see more resistance where two lines are close together, like these turd balls right here. And Earl, these turd balls right here. So when there are two lines that are near each other, there's more confluence. So when we're close, also you're going to see wickiness. Wicky, when we get near a line. So it's going to come almost all the way down to the line, either touch it by a tick or miss it by one tick, and then go the other way. And so you're seeing here a progressive staircase as it moves down and down and down. So we're pretty close, but there's still a few lines, more than I'd like. And so what can we do, Juan? We can turn the radio dial. Let's go to a 130. 130 is good. At least where we're at right now. But we lost our bottom resistance, Earl. Aww. 130 was good. We lost our bottom resistance, but the support this morning is in the right ballpark. And this is trial and error. Let's try a fib number, 144. Ooh. Ooh, wait. Stop the presses. Stop the presses. And you'll see when you just play with this that everything starts to come into focus. Oh, focus, Daniel-san, focus. Yes, oh, paint on, paint off. Wax on, wax off. So we have some valuable information here. And we can fine-tune this a little bit more. Earl says throw a 4-hour on there. Sure. There's nothing you can hurt by changing a number. Boom. There's your 240, Earl. What do you think of them apples, Matt Damon? Not bad. Okay, but remember, all of these lines are based on what? Time. Time. If you're lost and you look and you will find me time after time. So Earl, let's assume you love your 240. You call Mrs. Schatzman up. Honey! Come in here! What? Look at these lines. Those are some lines, all right. Ah! And you like what you see. I'm going to teach you lesson number 3. When you have a network that you like, number 1, write it down. Number 2, save the workspace. Because you'll be surprised how many times you get something you like and then you forget what you did. Or you change it and you lose your magical number. Lesson number 3. When you have lines that are a certain distance apart, Earl, you can draw 50% retracements in the open gaps. So right now, we're using 1-week-old turning times from gold, projecting rays forward from the 2-hour 1-week-old turning times from gold. And we're seeing this phenomenal support and resistance network that's obeying those times dramatically. But girls and boys, when we get to large gaps like this, Earl, one of the techniques that I teach is called Jacob's Ladder. You find the 2 lines and you connect them with a 50% fib. And now, everywhere you have a large gap, like over here, this bottom line, Earl, you can connect it with a 50% fib. And Juan, do you see what that does? How it accounts for the bounces that we're missing maybe in the 240? So when you're tuning the radio, Earl, it's always better to overshoot where you don't have quite as many lines than to undershoot where you have too many resistance lines. And then go back and fill in the blanks with the 50s. Does that make sense? Overshoot it. Use something a little too big. You can't really be wrong doing this, by the way. I've tried to do it with a wrong number, and it still comes out about the same. You can always go back and fill in the cracks. This is the bondo. The bondo of time is the retracement. You can fill it in. The spackle, the putty. The 50% fills in all the gaps, in time gaps and in price gaps. Okay. So we're on the crab, even closer. Bada bing, bada boom. Now, what do we do with this? Because over here, we had a pretty good time cycle marker situation going on, right? So, Earl, I'm going to come in to this indicator, and I'm going to make this stochastic value, this time cycle marker value, I'm going to make it default. So I right click and set default. So all of these values that we just set over here is sort of like a Ninja Trader fake out, cut and copy and paste. I hit OK. Now over here on this chart, I come back, I find my time cycle marker indicator, and you see how it's set to 240 black, all that fun stuff. If you're moving things around charts, that's a real easy way to migrate the settings without having to go back in and change everything again. God knows what Ninja 8 makes you do. Probably has a mortgage application, 58,000 steps. But as for right now, that's all you have to do in 7. And when I hit OK, I'm going to make sure that I load 150 days of data too. Remember, I need that data. That's the only difference, because we're going back farther to get these lines. There it is. Oop, there it is. Oop, there it is. Now change this. Remember the gap, 50%. Boom. We filled it in. Okay, so now Earl. The Earl of real estate. The Duke of the deal. I've got this information here. I don't need it anymore. Boom. Okay, I'll put the CL. Well, rather the CL. Which one is which? That's the original DAX. This is the GC DAX. We don't need this one anymore. Okay, so this is really all we have after all of that. So I will blow that up right there. How do we feel about this? Is this helping? Did you know you guys had that ability to do any of those things I just showed you? If you're feeling really froggy, you can come into the barrier line and just make it a little thicker. And if black is not your thing, you just got to change the color of the dots. But I'm going to leave these black for now. So you all can do this. You all have the tools to do this. The only thing you might not have is that multi-instrument analysis histogram, in which case you just have to create a secondary histogram. Alright, the last thing we're going to do is we're going to apply the matrix software. So the matrix upgrade is right here, Flux matrix exhaustion. And now Earl, I'm looking at a GC 0817 signal. It's a 5-minute stochastic, 5/7, and I'm just going to hit OK. And it should show me all the pattern 4s and 5s that are in there. There it is. Okay, so now Earl, what that software is doing, what the matrix software is doing, that upgrade, is it's looking for every place there's a higher high green dot and every place there's a lower low red dot. Every place there's a higher high green dot and every place there's a lower low red dot. And so that sort of brings me full circle to see, are the gold signals working and are they turning at the right times? Okay. So Earl, I've taken this about as far as I can in terms of time cycle markers, support and resistance, and multi-instrument analysis. So when that happens, it's a question of tidying up the chart and let's do that, and let's come in here and active down, we'll make it 6. Make this 6. Just pump it up a little bit. Well, once we have the base workspace in place, all we have to do is change the instrument, right, brother? Juan asked, do you think this would work on 6E too? Hells yeah. Absolutely. So let's save the workspace, and everyone here gets a copy. You get a copy. You get a copy. You get a copy. We'll save the workspace. But all we'd need to do would be to change this to the 6E, right? Everything else will auto shift. Who knows what it'll look like? I hope it looks good. But we would normally have to repeat that process for the other instrument to see if it was gold or if it was crude or any of that fun stuff. And so this morning on the 6E, that's what we have. Support and resistance is not the same, right, Juan? Doesn't look the same. The signals are good. The red and green dots are in the right spot. But the support and the resistance is off. So, Juan, if you were going to go through here, remember the radio dial? We would start out at the 60, right, Juan? Go back to where we were. This is for everyone that's going to do this on their market. And we'll go back to too many lines. There's the 60-minute chart on 6E. And we see that we're in the ballpark, right? You can see where it's bouncing back and forth between. Very close. So we know the radio dial. We're going to turn it just a little bit. Let's go to a 30. Let's get too much and then push it to not quite enough. Let's go to too many lines and then push it to not quite enough lines. Okay, 30. Still not in the ballpark, but quite honestly, we're at this high right here that we haven't been in. Okay, so we're getting pretty close. Right there, Juan. And I would say again, take your gap and now cut it in half. And then cut the gaps in half. Take that, cut it in half. Take this, cut it in half. And now you've got a pretty awesome 6E chart. Take this gap, cut it in half. Go too many, push it up from there, cut the spaces in half. And now you've got a pretty awesome chart. And Earl says, put my settings back. Who's this one character? I did save this workspace. So let me close it and reopen it. File, workspace, open workspace, FDAX, time cycle exploration. There she is. Just make sure that it loads up so that when I get everybody here a copy, and there'll be a copy of this workspace in the YouTube video that we post later, so if you miss it here, you'll catch the recordings. Okay, so in conclusion, all the signals on this chart, there is nothing lagging on here. As of right now, Earl, this is a pure 100% leading chart. Every one of these lines are reactive, every one of these times are reactive, and so it then becomes a question of looking for confluence across those two things. All right. This concludes our lesson on using time cycles to generate time and price critical areas used for targeting entries in the DAX.